slowing economy continues to be the theme here. It'll be interesting to see how the indices digest this. So far, somewhat of a muted reaction to here. But hey, we've got just the person this morning to help us break it all down. Scott Bauer, CEO of Prosper Trading Academy. Scott, I want to begin with the jobless claims. I think everybody was hoping to see something a little bit above that uptick that we saw last week to establish a bit of a trend here in terms of slowing job growth, but not necessarily the case here. It looks like it came in below the 225 anticipated at 209, and it also looks like last week's got revised to 223 from 231.
Yeah, and this is where we were a few weeks ago, and last week's number was a bit of a surprise, being up where it was around 230, which I know just got revised down. So yeah, we'd like to see somewhat of a trend here. Is this a one-off? Is this really a continuing of where we were? That's very questionable at this point. But really, Ben, all eyes now in terms of the jobs market is going to be focused on the November number, which will be next Friday, a week from this Friday.
Yeah, I think, again, this high-frequency weekly data, I think there's a limited amount of data in it. It's an important number, no question here, but obviously everybody looks to the bigger non-farm monthly number. And then maybe more importantly, Scott, I'm kind of thinking that the wages component is what really we're focused on, right? Because
sure.
Job growth is great. In this higher rate environment, in many ways, that's essential to be able to sustain the levels we're seeing in terms of stocks. But the wages component is really what ties into the inflation narrative.
Oh, there's no question about it. And that has been moving in the right direction. That's a number that not just the Fed, it wants to see continuing, but the market would like to see continuing as well.
Okay, so you got jobs, you've got the pattern that we've seen there, the trend for the most part continuing, no real lean one way or the other, but strength in the economy, underlying strength continues. Let's talk about durable goods orders, because it looks like they were looking for 0.1, it came in 0.0 for the core, and it looks like they were looking for a bit of a decline in terms of the durable goods orders month over month, and it came in worse than expected, down over 5%. They were looking for a 3% decline, Scott.
That's a big decline, and that's probably why we're seeing the market really in the same place as we were 5 minutes ago, given the weekly jobless claims pretty much offset with the durable goods. So, you have a little bit of a balance there. I would give a little bit more weight in terms of market movement, in terms of momentum, to the durable goods number if you're looking, trying to get some insight as to, okay, what's happening with the economy, what's happening with inflation, what may the Fed do here. So I think that one definitely holds more weight than the weekly jobless claims. I know this may not be on topic here, but I just saw a headline come across, which may be the most important news of the morning here, that OPEC is actually delaying their meeting by a few days here, and I think we're seeing crude prices really get hit on that.
Yeah, we were watching crude come off earlier this morning. It's good to hear that's the news. Appreciate you bringing that to our attention here. There had been talk about added production cuts ultimately, which is what sent crude a bit higher here earlier this week. Now we're coming off. We were kind of talking about some of that roller coaster whipsaw type price activity. Scott, are we still in an environment, do you feel like, where bad is good? I mean, where if we were to start to see jobs slowing a little bit, the S&Ps could continue to sustain these upper levels, assuming that weakness, the economic weakness, wasn't too severe, too much, too fast, so to say?
We are, Ben, but I don't think it's as important as it was maybe a month ago, 2 months ago.
With
so
rates
if
coming
we
off,
really
it's not
get some negative numbers here that the market does want to see, and the Fed probably wants to see, I don't know that we're going to get as much of an impact potentially on the upside here, just given the run in the market that we've had. We're into a little bit overbought territory here, but that certainly would continue into the Fed's narrative of, we're fighting this thing and it's still an uphill climb, but we are fighting it. But I don't think that the bad news is good news narrative is as strong as it was just a month or so ago.
Is that because rates have come off, Scott? We don't necessarily need to have that. If rates are pulling back as much as we would need to see as rates were peaking out?
Yeah, the Fed has, I don't want to say gone with this narrative all along, but Powell has said that the rise in rates, they're going to inherently do to the economy what we need it to do, and we're going to see things slowing down. We're going to see that growth slow down a little bit, and that's kind of what is happening. And if we get numbers like that, I think that will continue to play into that narrative. One thing that I was looking at this morning when I was reviewing next month's Fed meeting is their dot plot. They're going to actually come out with a new dot plot in December, Ben. And right now their dot plot only shows one quarter point reduction for next year, but the market is pricing in like a full point. There's something there that is going to have to come into balance. So, this meeting that we're going to have in the middle of December, this may actually be a little bit more significant in terms of volatility in the markets than one might think because of that. That is a huge disparity.
Scott, as that comes into balance, should we be keeping a closer eye on the yield curve than we have been over the last couple of weeks?
Absolutely. I think you may see a dramatic shift in the yield curve. If they change the dot plot from one quarter point reduction to maybe 2 or even 3, you're going to see a major shift in in the yield curve.
Scott, talk to me a little bit about OPEC right now, because you touched on that decision to push back the meeting from Sunday. We've been keeping a close eye on price activity, and as I mentioned before, some intraday opportunity, but not a lot of movement on the bigger picture over the long-term. Price is pretty comfortable around the 76 level. A bit surprising, one could argue, amidst some of the geopolitical events and the fundamental underlying story that's been playing out.
Boy, what a different landscape it is from just a month ago, after the uprising in the Middle East here, when all the predictions were for 100+ oil. And I think what this really shows is you go back to fundamentals here, and you know what? It's a demand issue. It's not a supply issue. It's a demand issue right now. China growth weakening. We're not getting as big a demand here. And, I don't have any insight as to why OPEC has delayed this meeting, but maybe that is some of the reason. Maybe they're really concerned about demand here. Maybe they had someone on OPEC Plus that didn't want to extend cuts, which is really kind of what people are thinking about, and maybe that's why they're delaying this here. Maybe there's a little bit of panic that's setting in there, but this range that you're talking about, mid 70s or so, I think it is surprising given the geopolitical risk. But if you can remove that, and it's obviously very hard to do so, the fundamentals out there really say that this is probably fair, and maybe that oil prices are even going a tad lower.
So look at price activity. We've been below the 50-day moving average for the most part throughout the month of November here. Recent failure up around 95 was a key test up there, those highs that we saw last fall, and we have rejected that upper level severely. It'll be interesting to see if we retest 65, this lower level from earlier this year, this spring around May. Scott, appreciate you joining us here to help us break it down, take a look at the numbers here, and talk markets this Wednesday. Have a great Thanksgiving with you and your family.
Thanks,
Scott.
you too, Ben.
Thanks to Scott Bauer, the CEO of Prosper Trading Academy.